Stephan just released a video about silver. Andrei Jikh is warning his subscribers. Ross Givens is breaking down the implications. When the biggest names in finance YouTube all start talking about the same commodity, something major is happening. China just made a move that's completely disrupted the global silver market, and the implications could affect everything from your investment portfolio to the technology in your pocket. In the next 12 minutes, I'm breaking down what China did, why it matters, and what you should actually do about it. Let's dive in. 0:45 to 2:15. What China actually did. Here's what happened. Over the past 18 months, China has been systematically doing three critical things. First, they've stockpiled massive amounts of physical silver. Industry estimates suggest between 200 to 400 million ounces. To put that in perspective, total global annual mine production is only 800 million ounces. China has accumulated nearly half a year's worth of global production. Second, they've been restricting silver exports. Export quotas have been quietly tightening, meaning less Chinese silver is flowing to international markets. Third, they're positioning themselves as the pricing authority for silver in Asia through the Shanghai exchanges, challenging the traditional dominance of London and New York. Why does this matter? China is simultaneously the world's largest consumer and a major producer of silver. They use massive amounts for solar panels, electronics, 5G infrastructure, and batteries. By controlling both supply and demand, they have unprecedented leverage over global prices. The result? A genuine supply squeeze is forming: high industrial demand, constrained supply, and prices that don't fully reflect the underlying shortage. Why finance YouTubers are reacting. So why are Stephan, Andrei Jikh, and Ross Givens all covering this? Stephan, who typically focuses on real estate and index funds, rarely talks about commodities. But he's now discussing the disconnect between paper silver prices and physical silver availability.
It's Graham here. So it's official. Starting January 1st, China will begin restricting its supply of silver to the global market. And when they control roughly 60 to 70% of global supply, that single decision is about to throw a major wrench throughout our entire economy. After all, what most people don't realize is that silver isn't just an investment. It's a critical resource used throughout cars, batteries, electronics, solar, on almost every item that we use on a day-to-day basis. Not to mention, the world is already consuming more silver than can be replaced. So with China's decision just a few days away, that price increase is expected to get a lot worse.
His concern: if there's a genuine shortage, why aren't prices exploding? His conclusion: market manipulation or derivative suppression is keeping prices artificially low. Andrei Jikh is approaching it from supply-demand fundamentals. He's focused on the industrial side. Solar panels, 5G, EVs all require silver.
Unlike gold, when silver gets more expensive, industries don't stop buying it. They don't just wait for the price to come down because they have to use it. Which is also why one of the biggest theories about silver and gold is that for the last few decades, their prices have been suppressed and controlled to be as cheap as possible for as long as possible. But over the next decade, the demand for silver is expected to go up because of all of these applications like AI and robotics and automation and everything that the government wants control over.
With the green energy transition, industrial consumption is projected to outpace mining supply. Add China restricting exports, he sees a genuine shortage forming. Ross Givens is looking at the derivatives market. He's pointing out that way more paper silver is traded than physical silver that exists.
Requiring special licenses that most companies will not qualify for. Now, why does this matter? Because China controls roughly 60 to 70% of the world's tradable silver supply, and the market already sees what's coming. Shanghai silver has surged to $85 an ounce, creating a premium over U.S. prices, while silver itself is already up 175% in 2025. But this is not speculation. This isn't inflation panic. This is infrastructure stress. Silver isn't just a precious metal anymore. It is a critical component for solar panels, electric vehicles, AI data centers, semiconductors, medical devices, 5G networks, clean water systems, and there are no real substitutes. Now, you might be thinking, well, we'll just mine more silver, but it's not that simple.
If enough futures contracts demand physical delivery, which China's actions might force, the system could break. What's fascinating? These three creators rarely agree on specific investments, but they're all highlighting silver now. That convergence is significant. The real fundamentals. Let's talk actual numbers. Global silver production is about 800 million ounces annually. Here's the problem. Annual demand is 1 to 1.1 billion ounces. Yes, demand exceeds production. That gap is filled by recycling and drawing down stockpiles. Demand breaks down as 50% industrial applications, 25% jewelry, 20% investment, 5% other uses. The industrial demand is exploding. Solar panels alone are projected to consume 20% of total silver supply by 2030. Each panel uses about 20 grams of silver. With global solar installations accelerating, do the math. Here's what makes silver different from gold. Silver is consumed and destroyed in industrial processes. Unlike gold, which gets hoarded for thousands of years, silver is actually used up. We've had a structural supply deficit for years. Consumption exceeds production. But prices haven't skyrocketed because of the paper silver market futures, derivatives, and ETFs that represent claims on silver that may not physically exist. China's actions are forcing this paper market to confront physical reality. By stockpiling physical silver while industrial demand surges, they're creating a potential breaking point in the pricing mechanism. The geopolitical picture. This isn't just about silver. China is securing critical resources across the board. Rare earth elements. They control 80% of processing. Gallium and germanium. Export restrictions announced. Strategic commodities. And now precious metals. Why? For reasons. 1. Preparing for potential conflict scenarios. If tensions escalate over Taiwan, they want resource independence. 2. Economic leverage in trade disputes and negotiations. 3. De-dollarization, creating commodity markets denominated in yuan, not dollars. 4. Industrial policy. China is the manufacturing hub. Securing silver means securing their solar, electronics, and green tech industries. From the Western perspective, this is concerning. We're dependent on imports for critical materials. Our industries rely on stable supply chains, and we're potentially vulnerable to supply cutoffs. You can't just create new silver mines overnight. It takes 7 to 10 years from discovery to production. China recognizes this vulnerability and is exploiting it. What should you do? All right, the key question, what should you actually do about this? If you're a conservative investor, consider a small allocation to precious metals. 3 to 5% of your portfolio maximum. You can get exposure through physical silver ETFs like SLV or quality mining stocks. Don't go overboard. Silver is volatile, doesn't produce cash flow, and is insurance, not wealth building. If you believe the thesis more strongly, maybe 10% allocation, split between physical silver and mining stocks like First Majestic Silver or Pan American Silver. But understand the costs, premiums over spot price, storage, insurance, and buy-sell spreads. If you're speculative, options on silver ETFs can provide leveraged exposure. But you can lose 100% of your investment. What I would not do: put your life savings into silver. Take out debt to buy silver. Panic buy based on social media hype. Assume this is guaranteed money. Here's reality. Even if the bull case is true, genuine shortages, China manipulation, paper market problems, the outcome is uncertain. Prices could spike, or governments could intervene, or manufacturers could find substitutes, or a recession could crush industrial demand. My balanced recommendation? If you have zero precious metals exposure and this makes sense to you, a 5% allocation is reasonable. Treat it as insurance against supply disruption. If prices double, great. If not, you haven't bet the farm. The contrarian view. Now, the bear case matters too. 1. The silver shortage narrative has existed for 20+ years. Silver bugs have predicted explosive prices since the 2000s. Being perpetually early is the same as being wrong. 2. Industrial demand can be substituted. If silver spikes dramatically, manufacturers find alternatives. Digital cameras eliminated photographic silver demand entirely. 3. Higher prices incentivize recycling. There's massive amounts of silver in electronics and industrial waste that becomes viable to recover at higher prices. 4. China needs low prices too. They're the largest consumer. It's unclear they want prices to moon. 5. Recession risk. If the economy crashes, industrial demand collapses. That's 50% of total demand. The paper market has survived many squeeze attempts. The system adapts. Rules change. The little guy rarely wins against institutional structures. Conclusion. Bottom line. China has made significant moves that disrupted silver supply. Finance YouTubers are right to highlight this. It's a genuine shift in commodity markets. The bull case has merit. Deficits, growing demand, supply constraints, and paper market vulnerability. Decades of failed predictions, substitution potential, and resilient financial structures. So what do you do? Stay informed but not obsessed. Consider a modest allocation if it fits your risk tolerance. Don't bet the farm. Maintain diversification. Remember that YouTube content is designed to be engaging. Dramatic headlines get clicks, but boring, balanced advice is usually right for most people. China's silver strategy is worth watching, but it's not a reason to panic or assume you've found a wealth cheat code. If you found this valuable, like and subscribe. Drop a comment. Are you buying silver? Skeptical? Let me know.